And this is what I want you to see. Take a look at this chart, and there is a lot that this chart says. As you can see, the dollar closed up for the week, and this pattern that you see, guys, is the upside diamond pattern. As you can see it right there. Of course, you can connect it from here. You can see the diamond. I don't want to waste too much time doing the diamond here, nor do I want you to squint looking for diamonds when there isn't. If there is a diamond, it will appear, and it will take a great deal of time for this to happen. This has been working since July of this year, so it took about 4 or 5 months until it began to develop. And right there you can see that the dollar closed up and positive for the day, even though it is the only currency or the only pair that the dollar has been positive against. If you look here, when we're talking about the position, that is your dollar index. Look how weak it is. This is how weak the dollar looks. If you go now to the dollar yen, that is the chart of the dollar yen. If you want to see it on a weekly base, you could see that it actually had technically a very strong week to the upside. So if the dollar was extremely weak, yet it has closed very positive and strong versus the yen, this now shows you how weak the yen is, and technically how strong the dollar is versus the yen. So we need to be looking for buying opportunities in the yen, in the dollar yen, and we need to be looking also for selling opportunities in the yen versus all the other pairs. That means what? This means that you want to be short, you want to be long the pound yen, you want to be long the euro yen, you want to be long the Aussie yen, i.e. you want to be short the yen across the board. So quickly now, let's find ourselves a place where we can buy the dollar yen. And we closed the week at 77.16. Let's see our radar screen, what we had on our radar screen. So we have a long point from last week at 77.68. We have a structure long at 77.68. Okay, so look at this. We closed at 77.17. We have a structure point at 77.68. I'm populating my charts again. Okay. Right, so in this case we can buy it. So if I'm looking at my intraday chart, you can see this. You see this move that happened on Thursday, this very nice explosive move to the upside. Okay, and it pulled back, and now it is coming back, and it's closing at the 77.22. This here is this high is 77.48. We closed the week at 77.17. So we are going to buy it above the high of the day. So we're going to buy it above 77.48. That is the high of the day, and our structure point is the 77.68. is going to be the same from last week. So I'm going to buy it above 77.48. My structure long is only 20 pips away from that, and if I buy it over here at 77.44, I'm going to place my stop around the 70, right below the market side. So I'm going to put my stop below 77.10. which i.e. inside, as if it comes below the market size, so somewhere around here. Okay, now for my short side, if I'm getting those explosive moves, take a look here. I want you to look at the left here. This is basically, look at this. This is 1, 2, 3, 4, 5, 6, 7 days. For 7 days, has been putting those same lows around the 76.50 and the highs somewhere around the 76.80. For 7 days, it's giving you this very tight setup for the ranges for the yen, and it has been going nowhere. Then finally, when it broke above it, you got this explosive move to the upside, and this is a classic head fake. This tells you, when you look at this, it tells you which way the market wants to go. That is the way to identify the birth of a trend. You got those 10 days going nowhere. Of course, we'll talk about a very big triangle that's been going on for the 3 months. Then it breaks to the downside on the assumption that this is a bear market and everybody's going to go short, and everybody sells it, only for it to turn back right in their face, and we get this explosive perpendicular move to the upside, and it's showing you how people are scrambling to get out of this market. That is our first indication which direction the market is going, and therefore that's the direction we want to be trading, and there is no reason for us to go short unless it breaks here. If it breaks here, that should be my first place to go short, because before that it's not going down at all. So there is no reason why I should spend my money shorting this anywhere above this. I can allocate my portfolio, putting it somewhere else. Because you see, all this is your support area. Look how many days. So you don't want to waste your short unless it comes below the 76.56. That will be your short, and the 76.30 is going to be your structure short to the downside. So I'm going to be shorting it below the 76.56. That's the low. And if I short it below the 76.56, I'm going to place my stop, very tight stop, above the 76.67. I'm going to show it to you here in a second. This is what I'm doing, guys. Let me show you the numbers, then I'm going to take you to the charts to see. So I'm going to go long above 77.48, and if I do go long, I have a structural long at 77.68, so I've got 20 pips higher. And if I do buy it, I'm going to place my stop at 77.10, so I'm risking about 38 pips on that trade. On the short side, I'm going to go short below 76.56, and if I do, I have a structural short at 75.94, about 70 pips below that. And if I do go short at 76.56, I'm only going to place a stop with technically about 10 pips around 76.67, and this is why I'm taking this tight top so that you can see. If I go short here, but I have the short, I don't want it to get back. This should be like a wall. This is like a solid wall. So if it breaks above 76.67, this means it has gone through 3-day low, 4-day low, and 1-day low. That is it. Thank you very much. I do not want it. I'm going to get out. Because if it has the power to go through these, this is what's going to happen. So I don't want to be caught in this. I'm going to let it go above 1 or 2, but I'm not going to let it go any farther than that. Okay, so this is the dollar yen, and I'm going to save it, and